All right, let's talk about something huge, a financial blind spot that so many families have. We're diving into the real economic value of a stay-at-home parent, and more importantly, why ensuring that value isn't just a good idea, it's absolutely critical.
Quick heads up before we start, this explainer is AI-assisted with human oversight.
Just look at this number for a second. Over $200,000. Now, you might be thinking, what is that? A CEO's bonus? Maybe a lottery win? Nope. According to the latest 2025 data, this is the real market value of all the work a stay-at-home parent does in just 1 year. Wild, right?
So when I ask, what's the salary of a stay-at-home parent? What's your gut reaction? If you thought zero, hey, you're not alone. But let me tell you, that's probably the single most dangerous assumption you can make in your family's financial plan. It's the reason this myth exists, that life insurance is just for the breadwinner. Well, today we're going to tear that myth apart.
Okay, so here's the big idea. We need to completely shift how we think about this. When it comes to a stay-at-home parent, life insurance has nothing to do with income replacement. It's all about service replacement. I'm talking about the actual real-world cost to hire people to do all the critical jobs they do day in and day out. Think about it this way. On the one hand, you've got this outdated model, right? It looks at a homemaker and just sees a big fat zero, no income to replace. But then you look at the modern, realistic way of thinking, and it's a completely different story. It sees a massive economic engine, a contribution so huge that if it were to suddenly stop, it would leave a gaping financial hole in the family.
So you're probably wondering, how on earth do we get to a number like $204,000? Well, this is where it gets really interesting. We're going to break down all the different jobs a stay-at-home parent is doing and figure out what it would cost to pay someone else to do them using fresh 2025 data.
All right, let's start building this out, and we have to begin with the biggest piece of the puzzle, full-time childcare. You know, a lot of stay-at-home parents are basically on the clock 24/7, and if you actually calculate the market rate for a professional nanny working the 98-hour week that so many parents pull, you're looking at over $10,000 a month. That's just one job.
Okay, what's next? Well, think about all the meal planning, the shopping, the cooking. That's basically the job of a private chef.
And if you average that out to about 14 hours a week, hiring someone to do that for you would run the family over $1,500 a month. The costs are really starting to stack up.
But we're not done yet. Let's add in all the constant cleaning and organizing needed to just keep a home running. If a parent is spending, say, 21 hours a week on that, the professional replacement cost is another $2,700 a month. And believe it or not, we're still not seeing the whole picture.
Okay, so look at this. When you actually add it all up, the nanny, the chef, the housekeeper, and then you throw in being a chauffeur, a personal shopper, suddenly that invisible salary isn't so invisible anymore. It's right there in plain sight. We're talking over $17,000 a month. That is the actual financial hole a family would be facing.
So let's think about the unthinkable for a moment. What happens to the surviving spouse? The easy assumption, the one we all kind of make, is that the breadwinner just keeps on working. Their job is fine, their income is stable. But that's a deeply flawed assumption. The reality is, it's a lot tougher than that.
The truth is, the surviving parent's career is immediately at risk. Why? Because overnight, they have to become the full-time caregiver and the full-time household manager on top of their actual job. This almost always means their own income takes a massive hit. And that's what life insurance is for. It buys you time. It gives you the money to figure things out without losing everything in the process.
You see this stat all the time. Nearly half of households would face financial hardship within 6 months if a wage earner died. That's already scary. But here's the kicker. When it's the stay-at-home parent, that financial stress doesn't wait 6 months. It's immediate. I mean, the need to hire childcare could literally start the very next day.
And we're not just talking about getting through the next week or month. This kind of financial shockwave puts everything at risk. All the big long-term goals, paying off the house, saving for retirement, it all gets thrown into chaos. This is why this is so important. A single life insurance policy for a stay-at-home parent can tackle all of these problems at once. The payout can clear the mortgage, which is huge. It means the family gets to stay in their home. It means the surviving spouse doesn't have to raid their own 401k just to pay for a nanny. It really does secure the whole family's financial future.
You know, we really have to stop thinking of life insurance as this grim, morbid thing. It's not about death. For a modern family, it's a strategic tool.
It's how you protect what is often your most valuable and completely uninsured asset, the stay-at-home parent. So if it's so important, why doesn't everyone have it? Well, a massive reason is this huge gap between what people think it costs and what it actually costs. The data is pretty clear. Most people, especially younger adults, think term life insurance costs 10, maybe 12 times more than it really does. They assume it's totally unaffordable, when in reality it can be one of the cheapest, most effective parts of their entire financial plan.
And today's policies are way more flexible than you might think. One of the most powerful features now is something called living benefits. This is a game changer. It means if a stay-at-home parent gets a critical illness, they can actually access some of the money while they're still alive. They can use it to pay for help around the house, to keep things running smoothly during a crisis. It's amazing.
This really says it all, doesn't it? Life insurance isn't for the person who dies. It's for everyone who has to live on. It's for your partner, for your kids. It's one of the most fundamental acts of love and financial responsibility you can take for the people you leave behind. Think of your family's financial foundation like a building with two main pillars. One pillar is the money that comes in from a job. The other pillar is all the essential work that happens inside the home to keep it standing. If you only insure one of those pillars, the whole structure is just wobbly. It's dangerously unstable. So, if this changed your perspective even a little bit, if it gave you a new way to think about your family's financial security, do me a favor and hit that subscribe button. We do deep dives like this all the time on the modern strategies that actually protect your future.